As we reflect on the second quarter of 2025, the tone in markets has shifted once again, but this time, it's not defined by new shocks, but by a slow settling of the dust related to policy uncertainty. Earlier this year, the return of tariffs and the surge in political noise created significant unease across global markets. But over the past 3 months, there's been a noticeable directional change. Negotiations between the US, China, and Canada have reopened, and while the tariffs themselves remain in place, their escalation has paused. This has allowed global supply chains to begin adjusting and markets, always forward-looking, to recalibrate. Now, in a sense, the noise certainly hasn't disappeared, but it's become somewhat predictable. And in today's environment, predictability is incredibly valuable. Still, we're not out of the woods. Economic data in the second quarter added a new layer to the story, one of deceleration. Canada's GDP contracted in May, and unemployment ticked up again, reaching 6.8%. US job creation remains positive, but has slowed meaningfully, and global manufacturing activity continues to soften. These are all the telltale signs of late cycle environment. Growth is slowing, labor markets losing steam, and central banks themselves are watching very carefully. Yet even with that backdrop, corporate earnings have once again surprised to the upside. Companies, particularly those in tech, healthcare, and consumer staples, are proving their resilience. They're managing costs, protecting margins, and adapting quickly. It's a reminder that while macroeconomic data may flash yellow, fundamentals at the company level still offer reason for some optimism. Now, let's turn to the performance of Matco's investment platform year to date. Our diversified income fund has returned 1.7%. Matco's Balance Fund is up 5.9% year to date. Matco's Global Equity Fund up 4.3%. Matco's Canadian Equity Income Fund up 12.1%. Matco's Opportunities Fund up 13.1%. Now, it's been a quarter of contrasts, steady results from income-oriented strategies, and continued volatility across equity markets. Beneath that, what's driving performance is a return to selectivity. Investors are becoming increasingly sensitive to valuations. Areas of the market that were bid up too aggressively, particularly certain tech names, have been under pressure. Meanwhile, opportunities in emerging areas like global small caps, infrastructure, and dividend-paying equities. Dispersion is widening, and with it, so is the importance of being disciplined. Now, here in Canada, one bright spot has certainly been the continued strength in commodities. Energy, metals, and agricultural products have all seen sustained pricing power. While that's partly due to supply constraints, it also speaks to the enduring global demand for hard assets. This is something that continues to support earnings in Canada's resource-heavy sectors. At the same time, inflation has remained elevated in several regions, even as growth moderates, a challenging mix for policymakers. We're not yet in a full stagflationary environment, but the ingredients are certainly there and present. And that's why diversification across asset classes, sectors, and geographies remains such a critical part of the playbook from an investment perspective. Now, the other area that we continue to watch closely is technology. While investor sentiment towards tech has cooled in recent months, the actual investment into the sector hasn't. The corporations themselves around the world are pouring capital into AI infrastructure, automation, and cloud-based systems. This isn't just a trend, it's a long-term transformation. It's reshaping how businesses operate. So, where does that all leave us? The second half of the year will likely be shaped by 3 questions. First, can central banks begin easing without reigniting inflationary pressure? Second, will trade relationships continue to stabilize further, or will political volatility spike again? And most importantly, can corporate earnings continue to outpace a slowing economic backdrop? Now, from our perspective, the answer to those questions doesn't lie in trying to make predictions. It lies in how we manage through uncertainty. At Matco, we continue to position portfolios with balance, capturing opportunity where it exists, but with a keen eye on risk. Our approach doesn't chase trends. It focuses on valuations, long-term fundamentals, and proper diversification. As market conditions evolve, we do continue to adjust our portfolios thoughtfully, always anchored in the process that has guided us through previous cycles.